Welcome to Money Talk Show TV. We provide the needed information and news for new investors in stocks and the crypto world. So today we will introduce and explain what an IPO is and how it works. The complete guide to what is an IPO and how it works. First, let's understand. What is an IPO? An IPO, or initial public offering, is a process by which a private company becomes a public company. Through this process, the company raises money to finance its business, and the general public gains the opportunity to buy shares of their stock. And some investors strive to be first in line to purchase shares of the newly traded company before shares are open to the market by having access to shares in pre-IPO companies. This guide will walk you through the steps of an IPO and what it means for the company and its shareholders. Now we know what an IPO is, let's dive straight into some of the benefits of a company's IPO release. What are the benefits of an IPO? An IPO, or initial public offering, is a process by which a company sells shares to the public for the first time. This can be done in order to raise money for the company or when it wants to become publicly traded on an exchange. There are various benefits of an IPO such as raising capital. Companies are looking to increase capital to increase its opportunity to expand and/or increase operations. Becoming publicly traded. This gives the company a chance to increase its support and awareness by being publicly traded. Building shareholder value. Some customers love and value some companies' services and goods, in which when a company becomes publicly traded, the company can reduce costs to customers and/or add new products. Now let's talk about the benefits of an IPO for investors. Early access to shares of a company. By investing in an IPO, you could enter the ground floor of a company with high growth potential. Let's say you invested into Amazon stock on its IPO in 1997 at $18 per share, and the stock reached an all-time high of over $3,000. Which is massive and life-changing gains from investing into the stock's IPO. Meet long-term investing goals. IPO investments are equity investments. In fact, IPO investments have the potential to bring returns in the long term. Great IPO investments can help fulfill long-term financial goals for some investors. Buy cheap and earn big. The IPO price of a great company often is the cheapest price if you invest in a small company that has the potential to grow big. Just like Amazon, as we gave in an example earlier. But be aware that some IPOs fail, in which investors could lose all equity if the company fails. And with that being said, we are not financial advisors, and you have to do your own research before investing into anything. Now let's move on to how this IPO process works. How does the IPO process work? The process of a stock IPO is not that different from the process of an initial public offering. It has to go through a lot of steps before it can become an IPO. The process starts with the company looking for investors, and then they start the fundraising process. The company will go through a lot of steps like setting up their company, hiring employees, getting their finances in order and preparing for when they are ready to make their IPO happen. The company will also have to do some research on how much shares it wants to sell and what price it wants to sell them for. Then, the company will have meetings with investment banks who will help them prepare for the IPO. They will help them decide what type of stock they want, which exchange they want to list on, how many shares they want. Last step is promotion and the release date of the company's IPO. That's where investors are looking for great companies that have the potential to grow along with the investments made by the investor. Conclusion: the complete guide to what is an IPO and how it works. Now you understand the process of IPO and how investors have the potential to find and invest in companies at the beginning. The process of an IPO is more complex than that of an ICO, which is related to cryptocurrency. It takes a lot more time and effort to prepare for an IPO. An IPO, or initial public offering, is the first sale of stock by a private company to the public. It is often used by startups to raise funds for future expansion. However, it's not as easy as just putting a sign up on the street and waiting for people to come in and buy your product. An IPO requires a lot of preparation before it can be offered to the public. Thanks for watching our video, and let us know in the comments if you want more videos on any investing topics. We hope this video is helpful on your investing journey towards financial independence. Please hit that like and share button to help support the channel. If you want to start investing into stocks and/or crypto, please use our links listed in the description. And always, be blessed to invest in yourself.